Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. Like in the case of many other nations, the US too has been battling record levels of inflation. As against a targeted inflation rate of 2% and as against its long-term average inflation rate of 3.27%, inflation in America today has been raging at about 8 to 8.5%. The prices there have shot up primarily due to the commodity supply bottlenecks and disruption caused by the Ukraine war. In order to tame the surging prices, the US Fed has been increasing interest rates rapidly, and it has said that it will continue to do so till inflation does not cool down to acceptable levels in America. The immediate impact of interest rate hikes has been the strengthening of the US dollar against most major currencies. The interest rate increases, together with the onset of recession, particularly in the US and in the EU, and the fact that the US economy is doing much better than its Western counterparts has increased the demand for the US dollar, taking it to record highs against other currencies. With the dollar at its highest level in 20 years against the other top currencies, the British pound is at its lowest level against the US dollar since 1985. The Japanese yen is at its lowest since 1998. And for the first time ever since 2002, the euro is valued less than the dollar. In 2022, the pound sterling has been down by 27%. The yen is down against the dollar by 22%. The euro is down against the dollar by 13%. And emerging market currencies, which includes the Indian Rupee, are down by an average of 6% against the American dollar. The rupee's depreciation of 9.7% in 2022 against the dollar has been relatively less, though it is much more as compared with the average decline of 6% of the emerging market currencies. And to defend and stabilize the rupee in the domestic currency markets, the Reserve Bank has spent over $100 billion so far. Moreover, the rupee has also fallen despite the matching interest rate increases by the Reserve Bank's Monetary Policy Committee in lockstep with the interest rate hikes by the US Federal Bank. The RBI governor may say that the Monetary Policy Committee is not concerned about currency appreciation, currency depreciation or volatility, but the fact is that its interest rate hikes have not been just to tackle the burgeoning inflation, but they have also been to checkmate an appreciating dollar. As the Reserve Bank Deputy Governor Dr. Michael Patra said in the recent MPC meet, that the spillovers of such monetary tightening and interest hikes by the US, these spillovers, he says, are global and overwhelming. But the responsibility for securing stability is national and it is not global. Each country is on its own, and India's interest rate hikes have thus been in tandem with those by the US Federal Bank. The rupee has yet fallen against the dollar by about 10% this year, notwithstanding these measures, including the Reserve Bank spending over $100 billion to defend the rupee value in the domestic markets. India's finance minister, while speaking to reporters after attending the annual meetings of the IMF and the World Bank at Washington, defended the 10% slide in the Indian rupee against the US dollar and very curiously said that it is not that the rupee has weakened, she says, but it is the dollar that has strengthened according to her. India's finance minister said that the fundamentals of the Indian economy are strong and that the Indian economy will grow by 7% this financial year. She then said that the Indian rupee has performed much better than many other emerging market currencies and the rupee will endure the dollar strengthening that is taking place. She then said that the Reserve Bank is working to contain the rupee's volatility and that the rupee will eventually find its own level. She mentioned that the fundamentals and the macro fundamentals of the Indian economy are good, and that she further said that India's trade deficit is actually growing across the board, meaning that we are importing a lot more than what we are exporting. Perhaps supporting the rupee's performance as claimed by the finance minister, the Business Standard points out that while the rupee has depreciated by 9.7% against the dollar this year, it has however gone up by 25.4% against the Turkish lira. It has gone up by 15.9% against the Japanese yen. It is up by 8.5% against the British pound, and the rupee is up 2.1% against the Chinese currency renminbi. It must be noted in response to the finance minister claim that while the rupee has depreciated by about 10% against the US dollar, the emerging market currencies on the other hand have depreciated by an average of 6% only, and that those of South Africa, Brazil, Mexico, Indonesia and Peru have fared much better against the US dollar than the Indian rupee. Their depreciation is much lower. Some of them have actually appreciated against the US dollar. The finance minister's statement at Washington does give rise to the debate whether the dollar has strengthened, and is it that the rupee has not weakened as she says. Let's talk about the American dollar first. The reality is that the strengthening or the weakening of a currency in the short term is mostly driven by the market dynamics of demand for the currency concerned. But in the medium to long term, it is driven by and it reflects the comparative fundamentals of national economies. The present strengthening of the US dollar to us is driven more by the build-up of an extraordinary demand for the American dollar than because of the absolute strength of the American economy, which is today mired in rising inflation, whose government debt exceeds its GDP today, where fiscal deficit is high, and which has a trade deficit of $1 trillion per year because of its import of goods and services far surpassing its exports every year. The reasons why the dollar has gone strong at present are not ordinary. They are not truly normal, and they are more of a passing nature according to us, and things will settle down the course. What are the reasons today why the dollar has gone so strong? The first one, at a time when a worldwide recession is setting in and both equity and bond markets worldwide are volatile, the dollar is seen to be the safest item to hold your asset in, thus increasing its demand and also increasing its value and price. The second factor, the dollar enjoys the privileged status of being the world's reserve currency, and thus central banks and financial institutions worldwide hold huge amounts of dollars for international transactions where they can indulge in lending transactions without converting the funds into other currencies, thus making lending more profitable and more efficient. The third reason, the US economy is looking comparatively healthier than those of many other nations where growth is slower and national debt is higher than in the US. Europe is particularly struggling with higher inflation and slowing growth because of energy supply disruptions due to the Ukraine war, and recession has already set in there. Consumer demand has been falling, growth has been impacted and is headed into a negative territory. The fourth reason, the US Federal Bank is focused on reducing inflation and is raising interest rates higher and faster than other central banks worldwide, thus increasing the demand for the US dollar again. The dollar will remain strong as long as the American economy continues to outperform other big economies and the Federal Reserve Bank keeps increasing interest rates till inflation, which is linked to the Ukraine war, subsides. As long as this continues, the dollar is going to remain bullish and buoyant. A strong dollar may be good for the US importers, it may be good for the American consumers and also for the American travelers, but it is not without numerous negative consequences. A strong dollar hurts the profits of American multinational corporations with operations in different countries. A strong dollar makes its exports suffer. Its tourism industry sees fewer arrivals. Its stock market prices become too high for foreign investors, and foreign investment in emerging markets becomes less attractive. The dollar today is puffed up due to short-term factors linked to the Ukraine war. It is already too strong for its own good, and it will correct its levels at the earliest possible according to us. That was about the strengthening the strong dollar. Let's now talk about the Indian Rupee. The rupee's performance against the dollar looks good in relative and comparative terms only and not in absolute terms. Moreover, a 10% depreciation of the rupee does mean that it has weakened. The rupee may not have weakened sharply, but its critical parameters show all signs of weakening, not just for reasons of demand and supply, but also for reasons of eroding fundamentals, which finally determine what should be the value of a particular currency. And what are those eroding issues we are talking about? The first one, the current account deficit of a nation indicates the demand for dollars. India's imports perennially exceed its exports, even when the government tom-toms the rising exports. Last month, our imports at $61.5 billion outpaced our exports at $35.8 billion, widening India's current account deficit to $25.7 billion in a single month. If the current account deficit keeps rising, it will keep weakening the rupee against the dollar. The second one, linked to the current account deficit, are the forex reserves, which in our case have fallen by over $100 billion in a year's time as the Reserve Bank seeks to defend a struggling rupee. The more the forex reserves go down, the more the dollar value goes up. The third, the present growth has been fueled by consumer demand, which will dip after the festival season is over. Over 45% of Indian households have not seen an increase in their income levels in the last 12 months despite raging inflation, and there is no perceptible, sustainable, durable improvement in employment levels. If growth depletes, so does the value of the domestic currency. The next factor, the longer inflation remains higher in India, the longer will the currency depreciate, and we still have a few quarters to go before inflation is expected to fall to acceptable levels of the Monetary Policy Committee. And finally, the rupee value cannot be supported endlessly by interest rate hikes by the Reserve Bank in order to match those by the US Federal Bank, which there also is yet to reach its peak. The rupee will eventually slip against the dollar to come to its own level, as the finance minister says. The reality is that the finance minister's claim may sound correct, but it is more a case of selective comparison than something very real. It is also based on short-term factors which will eventually go away, and the real factors of a rising current account deficit, falling forex reserves, the growth being impacted, etc., will affect the rupee. And that is where the reality lies about whether the rupee is weakening or it is not weakening. This is Akhilesh Bhargava signing off till we meet again. Namaskar.